The markets have been incredibly volatile. We've seen a lot of negative price action, primarily due to tariff talks. Now, in the next 5 to 7 years, Bitcoin will take out gold in terms of market capitalization. What's that mean? Bitcoin will raise up from $1.65 trillion to in excess of $20 trillion. What does that mean to price? We would anticipate at a bare minimum, Bitcoin will be trading in excess of $1 million. Are you going to let this negative price momentum kick you out of intergenerational wealth opportunities? Or are you going to be an institution of one and not mess it up? In this video, we'll look through the news and look at what's cooking inside the crypto market and of course the major markets which control crypto. Let's run the numbers. In the past 24 hours, what caused Bitcoin to come down? It was the decay in the S&P 500, the Nasdaq, the Dow, and also the Russell. Expect negative price momentum potentially inside other major market indices. As those indexes wake up and start trading, they're going to see all of this negativity inside the US market and be affected by it. We know that Bitcoin cannot escape the stock market's gravity, but other stock markets cannot escape the US's gravity either. And it's pretty obvious, if you were paying attention to what the major market indices were doing, you already understood where Bitcoin would be going. Because we know inside our community, we are an institution of one. We are not retail. And thank you to everybody for yesterday's comments. You are just awesome people. Before we get into the news, let's just have a quick look at Bitcoin and total crypto market cap. If we look at it just purely from candlestick pattern analysis, we don't know much. In fact, we don't know anything because we cannot see the structure. One of the things that we saw in yesterday's video, we were around there. We hit the 84,204 mark, which was a structural resistance level, and we were pushed down into the 83,029 area. We tried to break out from the 83,483 several times, but just couldn't make it. This created negative structural attraction down to 81,866. But as the indexes came down, the entirety of the crypto market followed it. Bitcoin's price movements aren't dictated by Bitcoin. They are dictated by intercorrelation and interconnection across the cheat sheet. What are the levels that we need to look at currently? Currently, Bitcoin is 81,239. If we get a rejection from the 81,580 or a rejection from the 81,866 mark, that will create negative structural attraction down to 79,501. But if we manage to get above that 81,866, that will create positive structural attraction back to the 83,029 and the 83,483 level. The issue is we know exactly where smart money is going to come in and sell and exactly where smart money is going to come in and buy. We have X-ray vision. There's no need for candlestick pattern analysis or anything like that. You absolutely know where the smart money levels are ahead of time. You only need to know how to read between charts and through charts. And members, please note that TradingView changed its way of publishing indicators and it just knocked out the capability of updating the indicators in the page to the current month. So what you do is just make sure that when you add the current indicator, it is green. It has a green background. Good on you, TradingView. I'm trying to work with them, but I've heard basically crickets from them so far. When we look at the structural levels on total crypto market cap, we can see at that 2.69 trillion, there was a lot of overhead structural resistance, and it was just rejected from that point. One thing that's good, we can see that we're overcoming a degree of structural resistance at the moment. If we can get above that 2.62 trillion, that is looking particularly good for Bitcoin and of course all of the crypto market. These safety nets are vitally important to know where they are, and you must look at total crypto market cap and Bitcoin together structurally to know where your money charts are going. There are opportunities absolutely everywhere, but you need to know the intercorrelation and interconnection across the cheat sheet. When you learn how to time the market, there are always opportunities just literally across every single market. Okay, let's check out the news. In news today, we can see the major market indices are down. The US 10-year, the VIX went up, and gold also improved in value. We can also see that President Putin rejected the immediate ceasefire in Ukraine. CZ is looking for a pardon at the current time. President Trump is at it again with the tariff wars, claiming a 200% tariff on US imports of wine, champagne and other alcoholic beverages from the European Union. And as we get pretty much all the time, a government shutdown is looming. It's just another day at the office. We've now got the news talking about the S&P 500 sliding into correction territory. And it's been a pretty steep decline because the VIX has been spiking like there's no tomorrow. As I've been mentioning for some time, 2025 will be the year of the trader, not so much the year of the investor. You just have to strap yourself in for rampant volatility this year. And that's a good thing, that's not a bad thing at all. One thing to note, the main markets are terribly oversold at the current time. Whenever the markets whenever the markets experience negative price action, people talk about the R word, recession. But what are the models telling us at the current time? The probability of recession is actually falling, not increasing. If we look backwards and look at the particular retracements that have occurred as we've been going through time, we typically see a retracement followed by a rally, retracement followed by a rally, retracement, rally, retracement, rally, retracement, rally. You get the idea. Please let me know in the comments, do you expect us coming out of this, or do you think there's more negative downside action? And think about that answer from two perspectives. One is a retail perspective, and retail always expects continuity. They expect just prices go in a straight line, even though prices have never gone in a straight line, and it's damn obvious because you can see it on the chart. Retail thinks it's going to zero. Do you think of a continuation down, or do you think that we'll get a recovery? Please let me know in the comments. In yesterday's video, I talked about the retail mindset. The retail mindset is where you hand over control and knowledge to other people. It's about not understanding the rules of the market, hoping and praying, and just getting caught up in fear all of the time. One thing to just bear in mind, in 2020 we had this huge retracement. That retracement was the single best time to get into stocks, commodities, crypto, everything that existed. When you look from an institution of one lens, these pullbacks are nothing other than a red carpet. And I'm not talking about a red carpet of blood. I'm talking about the fact that these are incredible opportunities to get into the market. You're getting the percentage on the right side and not the wrong side. Typically, people buy when it's going up, and when it retraces, they sell. As you get in when it's coming down, especially if you believe in what you're doing, and you need to have a bit of macro understanding on things as well. The trade wars will pass. The US is simply onshoring. For so many years it offshored its supply chains throughout the entire world. It's reshoring. It's pulling back industries. And it is painful, but it's also required. Also, the thing to understand, there's a lot of macro winds that are blowing inside the main markets, and of course, they've crept into crypto. But the commodities are doing really well because what's occurring inside the global economic system, people are saying, oh God, blimey, I'm going to have to put up my own production. So this is spurring a commodities boom across the board. Understanding how the economic system all fits together is very valuable. Whilst retail is screaming for the exit, smart money is actually doing the opposite thing. It's getting into these markets. One thing to just bear in mind, when people are just exhibiting massive amounts of fear, that's when the institutions are buying. And the institutions are selling when there's massive amounts of greed. To be an institution of one, you literally need to think opposite to how you would think normally. Stock market's Fear and Greed Index is currently at 15. This is a rampant buy signal, not a rampant sell signal. This is a rampant sell signal. When extreme greed hits, that's when you want to get out of the market. When extreme fear is here, you want to get in. But of course, you must know what you're doing. You literally want to aim at being an institution of one. Retail is looking for big rate cuts, but the FOMC meeting, which is coming up fairly soon on the 19th of March, has a 97% probability of absolutely no change. This will be a mystification to people, but not to us. We know what's going on and we run the numbers. When looking at crypto fear and greed, we can see it's currently down to 21. It is extreme fear, and yesterday it was even more at 19. Unfortunately, a lot of people inside the crypto market don't actually understand that crypto and the stock market are intimately connected. If the major market indices are coming down, you can pretty much bet the crypto is heading down with it as well. The major problem that the markets have currently is the VIX is spiking. It's spiking and it's not going down. Well, it went down just a little bit yesterday, but it is still in an upward trajectory. What's really interesting here is that the VIX is very specific. Normally it just blows off and decays, blows and decays. This is not a blow. This is a ramping up. Now, why has this occurred? It's occurred because of economic uncertainty and President Trump giving every single country and everybody who can lay his hands on a tariff. Very good of him. And the markets have become very, very unsettled. But if we look into the VIX, this is actually a very constructive thing. Provided the VIX doesn't make a higher high, it is on the path to decay from here. It's very early days yet, but it's something that you want to keep on your radar. If you're a gold trader or investor, something that you want to look at is the structural composition of gold at the current time. We can see that the next level of substantial structural overhead resistance is actually at the 3,053 mark. We have structural support underneath at 2939. So we could see gold absolutely explode upwards because there's no overhead structural resistance to speak of. But if you were looking at a chart like this without the CTKS method applied to it, you would be hard-pressed to know where any support and resistance levels are, unless you looked at candlestick pattern analysis. Candlestick pattern analysis is always looking backwards and trying to determine patterns or at least fit them, and sometimes we fit them by just imagining that they're there. Instead, there is a much better way to know where the structure is inside the market, to see if we're getting above structural overhead resistance and converting it into support, creating positive structural attraction to higher structural levels, or if we're not doing that and we're creating negative structural attraction to levels of structure below that price. Price is always moving in a wave-based function between structural levels. If you understand this, you're ahead of the vast majority of people. As far as retail is concerned, it's all over because we've moved below the 200 period moving average. But just be aware, volatility is going to be inherent in this particular financial year. The nature of all price is that it moves in a wave between structural levels and not moving averages. One thing to understand with a moving average is all about literally an average of price across a specific period of time. And those moving averages are distorted when price goes exponential, and price is exponential. So one thing that you want to be aware of when you get these big sell-offs in price, and this is C19, look how it cut down, 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 and then bounced like a Super Bowl. Please be aware, if this price action occurs, we would expect quite a substantial retracement. Now, why does this kind of thing occur inside financial markets? Because people who are shorting need to cover their shorts. How do you cover a short? Well, you sell first and then buy back later. So to cover it, you must buy second. Sell first, buy second. This creates buying pressure in a market that has no buyers. So what you see is price can come up rather quickly. But if you're following the CTKS method, you will know when price is weakening. And we always have our structure. We understand where the safety nets are. One thing is absolutely certain. We're getting price action that looks like this, and people will be getting absolutely terrified, unfortunately at exactly the wrong time. And this is why in yesterday's video the title was "Don't Fall for It." All you need to do is keep your eye on Bitcoin. If Bitcoin is recovering, it's because the major market indices are also recovering. If Bitcoin is going down, it's because it feels out that the risk is coming out of the major market indices. Being an institution of one, you're looking for the opportunities, and we can see that Bitcoin is still under a degree of stress. It is in a downtrend. It hasn't broken out. It looked like it could have done so yesterday, but it didn't do so. It sold down because the major market indices sold down as well. All you need to do is to keep your eyes on what is actually happening with price around these particular structural levels. These structural levels are an incredible thing. They are not random lines drawn on a screen as you would see other influencers do. These require 2 levels of standard certification to draw. Please let me know in the comments, how has the CTKS method helped you to identify and capitalize on more opportunities? Knowing the levels where smart money will sell and smart money will buy, and understanding intercorrelation and interconnection is an incredibly valuable skill. And it works across any market condition, down, up, flat, doesn't matter. I'm really looking forward to your comments. And thank you again to everybody who commented in yesterday's video. You're just amazing people. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.